This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call. You're watching us live from the CNBC TV18 Motilal Oswal studios right here in Mumbai. I'm Sonia Shenoy, and joining me this morning are Prashant Nair and Nigel D'Souza. Folks, it's not looking that great for the market, but you know what? The Nifty has been so resilient amidst all of these weak cues. So let's see how today shapes up.
Absolutely. I mean, actually, I thought yesterday while we were signing off for the day that maybe yields and dollar will start to, after the massive move they've had, they'll start to behave a little bit, come off a little bit. Well, no such luck.
I think on, on more positive terms, this morning when I woke up, I make a header, right? That cues to watch for Tuesday. I was like, it's already Wednesday. Good times, guys.
Just 2 more days. No, 3 more days.
3 more days today, and then we get through the other. But I am feeling quite fresh because it's just coming out of a long weekend, so I just thought on a positive note. But a lot of
Nigel, you are feeling fresh because you are coming out of a long weekend and a nice little break.
Lovely.
All right, well, let's just quickly tell you what you need to know as we begin today's session. We're all smiling, we're all happy, and no reason why we should not, although the markets are lower. I mean, I'm talking about the US markets because that's where we want to start this sort of presentation with. So, the massive rise in US yields and dollar continues, and that is basically what is inflicting damage. If you look at the US 10-year yields, they're up 100 basis points in the last 2 months. This is the overnight change across the US curve. The 5-year went up 9 basis points. The 10-year went up 12 basis points. The 30-year US yield went up 13 basis points. It hit 4.95. I mean, incredible, right? I mean, the 30-year, you're now closer to almost 5% there. So these are very large moves, and they are especially troublesome because they come on the top of already very large moves that we've seen over the last 2 months, as I explained. I mean, actually, for the 10-year, it's not 100 basis points now. Adding yesterday's change, it's about 110 basis points in the last 2 months flat, right? So troublesome. The dollar index that stays above the 107 level, so 107.07 is where the dollar index is at. And equities, as a result, were under pressure. So look at the S&P 500, down about 1.4%. The Nasdaq was down about nearly 2%. The Russell 2000, which is the small cap index, down another near 2%. So these are large cuts that we are looking at for on the day. Now, the S&P 500 is almost at its 200-day moving average. That's essentially the Lakshman Rekha, right? I mean, it's a longer-term, slower moving average. And that stands at about 42.22. We left off at about 42.30 or so. So very close to it. The WIX, which is the CBOE WIX, which is the fear gauge, that has stopped 20 for the first time since May. And that additionally is also putting pressure. There was data which was the underlay for all of this, and data was strong in the US. The JOLTS number beat expectations. On top of it, you also had Fed speak, actually 2 Fed speakers specifically, who kind of reinforced this entire theme that interest rates in the US need to stay higher for longer. So, Fed's Mester, he endorsed a hike in November. And there was another gentleman who's also a voting member, Bostic, who repeated the preference that rates need to stay higher. Now, of course, that's essentially been the problem, and more, the consensus from calling for a soft landing, from saying no landing, I mean, it's kind of weird away to the fact that, and kind of facing the fact that maybe we need to be prepared for, rates to stay high and any cuts to be back-ended sometime in 2024 and smaller. So that's where the consensus has moved. Oil prices, which saw a 5% sell-off, and we were talking about that yesterday morning, same time, they moved up a little bit. Nothing very large, but 91 or so, and they still remain about $7 from their recent highs. Where does all of this leave us? It leaves us in a tricky kind of a spot once again. Yesterday we were saying that don't do anything right at the open, and maybe staying on the sidelines is the best thing, and that perhaps is true. You do get these intermittent bounces, but like what you saw yesterday, perhaps they get sold into. So the Nifty yesterday closed below the 40-day exponential moving average. Once again, it's not being able to clear that level in a convincing way. There is no clear evidence of a breakdown, right? I mean, we are still above 19,500. So that's, I think, the good news. But I think one needs to stay open to the idea that maybe a little bit more in terms of downside is coming, maybe in a slow, slightly lagged fashion, but it's possible it's coming. So on the downside, there's a possibility of a test of the daily low Bollinger Band, which stands at about 19,362. That's a little away from where we left off yesterday, but keep that number in your mind. On the Bank Nifty, we've once again closed around the 78% retracement of the August to September rally. You know, day before yesterday, it looked like it had cleared that, but no luck. We left off just within a couple of points off that. On the Bank Nifty, the daily lower Bollinger Band is 43,808. Again, these are sort of near-term levels that we are looking at. This is, 2% away on the Bank Nifty, but keep that number in your mind. And on the way up, I mean, I think for both the Nifty and the Bank Nifty, there are these retracement levels, but there's also the 20-day, which stands at the 44,803 level, and the 40-day exponential moving average, which stands at 44,032. These are resistance levels. I mean, it'll be fantastic by the end of day today, by 3:30, if, somehow by a miracle, and, the market here has been nothing short but miraculous, is able to defend or close around the 19,500 level. Will we get that? I mean, it's a tough ask, but we will see. The open itself is indicating a 140-odd point lower start. Sonia.
Absolutely. I mean, it's going to look pretty ugly this morning, right? At least that's what the GIFT Nifty is suggesting. But give and take everything, it's been a pretty resilient market. So, yes, it's a bear attack that we have on our hand, but the Nifty has been so resilient in this market, and I think that's something that will stay with me. If you look at the trajectory so far, we've lost, about 3%, right, from the September 15th high of 20,192. So it's not been such a big fall up until now, but let's see what the next couple of days throw up. There are a lot of cues stacked against the bulls. So whether it's the US 10-year Treasury yield, which is at a 16-year high, there was a big slide in the Dow overnight. The Dow, in fact, is now negative for 2023. So it's wiped out all of its gains that it's seen through the course of this calendar year. And FIIs, the selling has been pretty sharp as well. So FIIs sold over 2,000 crores in the cash markets yesterday, and that's been selling for 9 straight days. But I'll tell you why I'm still a little hopeful about this market is because the fundamentals, the macros are looking good here in India. Just one case in point, right? A couple of these companies came out with their numbers and their quarterly updates. And I think one of the stocks in focus today, and perhaps the stock of the day, could be Bajaj Finance. A very strong business update is what the company has come out with. There is fundraising tomorrow as well. So all of that put together will perhaps, give the market some hope that things are not so bad. Just look at the numbers. New loans booked in Q2 grew by 26%. The AUM grew by 33%, almost at about 2.9 lakh crores as of 30th September. And also some of the other smaller, components in the BFSI space have also done well, whether it's Bank of Maharashtra, CSB Bank, M&M Finance. We'll talk about them in greater detail later. But M&M Finance, for example, reported a disbursement growth of over 13%. So yes, global cues are weak. Yes, there is selling pressure from FIIs. But in our own markets, the fundamentals are not too bad. And hence, the Nifty has been resilient around this 19,000 mark. But let's see how it goes today.
Well, that's right. Sonia, globally, we're standing out. But there are too many negatives globally to ignore. So you need to put them on the table as well. You need to take note of the higher yields, the rise in crude oil prices, the stronger dollar index as well. The broader markets, that's really been the theme that has played out. And I think there are still many, many stocks out there that could still outperform the market by a great deal, but you need to be careful on suspect names. But that's been the theme. Even yesterday, you had the mid-cap and the small-cap indices. They did much better than what the Nifty did itself. For today, though, the Nifty Bank holds the key. Why is that? We have got a lot of updates that have come in there from the banking as well as the financial names. So that's point number one. Point number two is the IT index could be a little bit under the weather because the Nasdaq was under some pressure. So the Nifty banking index itself will have to hold one end up. And point number three is today's expiry for the Nifty Bank. So I'll be watching that index very, very closely. The Nifty banking index holds the key for today if the bulls need to defend the lower levels. What did the FIs do yesterday? Well, you looked at the premium on the Nifty and it had come down quite a bit. That told you there were shorts in the system. And the FIs, they added close to 20,000 short contracts. And in a matter of few days, the short positioning has gone up from around 25,000 short contracts all the way to 85,000 short contracts. If you just look at the last few days, you'll see the way the short positioning has gone up, the net short positioning from the FIs. What about the options data? Well, yesterday, the 19,600 call, 19,550 call, both of them were fairly active. At the start of the day, the premium in both those two strikes were at around 100 and around 150 rupees, which tells you the bears believe they have got this 19,700 mark for the taking. They don't see the Nifty moving above that, and that's why there is such aggressive writing out there. So that becomes a bit of a resistance zone on the upside. You also have the 20 and the 50 DMA that are in that vicinity. On the downside, 19,450, we're going to start below that level. But on a closing basis, the bulls will want to defend that because the highest open interest on the put side is at around that 19,500 put. The premium has come down to around 30 rupees approximately. So that's going to be the important strike that you're tracking out there. The Nifty Bank, since its expiry, we need to take note of that as well. 44,400 call. Well, that was fairly active yesterday. The premium was around 350 rupees odd. So 44,800, that becomes a very, very crucial resistance zone. But on the downside, you'll want the recent lows at around 44,000 to hold out. So all eyes on the Nifty Bank. It plays out expiry today. If there's something that can bat for the bulls, it's going to be the Nifty Bank because the Nifty is likely to pull back 130 points.
Okay, well, the RBI's MPC meeting is also scheduled, so it kicks off later today. So we'll, of course, get you a lot of macro opinion coming through on the market. So let's see. Oil prices have rebounded from their 3-week lows as well. So that's another internal to track. Brent continues to be around that $90 a barrel mark. More on that later. But in the meantime, we have a lot of opinion coming in for you this morning. And one of the best voices in the business, Rhythm Desai of Morgan Stanley, says that the trade that seems almost certain in the current quarter is higher volatility. The heavy calendar is packed with events with binary outcomes in a market that is less volatile than it has ever been. The fundamental story is intact. India remains one of their top picks in the emerging market space. In terms of sector positioning, Morgan Stanley is overweight on financials, technology, consumer discretionaries and industrials and underweight on other sectors. Rhythm adds the macro trade is approaching its peak and they may soon be back to stock picking as the more effective strategy.
Okay, let's get you some money market views now. So we've got Kunal Sudani weighing in on the rupee. He says that rising U.S. Treasury yields and faltering global growth outlook, supply-constrained rising oil prices and a short-term government funding stopgap for the U.S. are all sending investors into safe haven, which is the U.S. dollar. Eyes now remain on U.S. non-farm payrolls data. Dollar index may find resistance at the 108.1 levels. For the dollar INR, 83.05 to the dollar acts as a support, while 83.3 to the dollar is the immediate resistance. And that is followed by the next level, which is 83.5.
All right, and on the bonds, Neeraj Gambhir of Axis Bank says the 10-year benchmarks traded in the range of 7.15 to 7.24%. Bond yields moved higher on weak global cues and weaker auction demand in the longer duration and increased supply and operational challenges related to the quarter-end closing and shifting of the holiday. He expects the 10-year benchmark to trade in a range of 7.15 to 7.25% ahead of the MPC this week.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. But for the time being, let's run you through the list. Bajaj Finance, IDFC First Bank, Avenue Supermarts, Nestle, Bank of Maharashtra, Yes Bank, APL Apollo, and Titagarh Real Systems. They are expected to open up in the green, while on the flip side, you have Vedanta and Polyplex that could be reacting to negative news flow.